Content is intended to provide accurate information, however, is not intended as financial, tax, or legal advice. Please consult a financial, legal, or tax professional for specific information regarding your individual situation. Opinions expressed and provided are for general informational purposes only and should not be considered a solicitation for the purchase or sale of any security.
Welcome to Game Plan for Retirement, presented by Chris McIntire, Northwest Ohio's retirement planning resource.
And welcome into the program, Your Game Plan for Retirement with Northwestern Ohio's resource for a common sense approach to planning for your financial investment and retirement future. He is Chris McIntire, president and founder of McIntire Retirement Services. And Chris, planning for our financial future, bringing that common sense that you do, not an easy task these days, full of challenges. The economy's facing some headwinds here. You always address them head on, which we appreciate, but always break it down on a level that we can understand the issue and why we need to plan proactively to face it. So once again, Chris, welcome back into Your Game Plan for Retirement. We're glad you're here.
Hey, my pleasure to be here, Peter. Thanks everybody for listening today. And it has been a challenging environment out there. You know, we went from very low interest rates to very high interest rates. And today we're going to talk about, some of the three biggest retirement risks here today. And I think, the first one most of us are going to think of is, taxes are going to be the highest. Okay. We're going to talk about inflation as one of the second biggest expenses, and then also healthcare, Peter.
So we got to address these expenses because, Chris, adding up all of the cost, retirement is pretty expensive. It's in the future, so more expensive than today, and it can be pretty long. And so we need to make sure our money lasts. The best way maybe to do that is to define what those expenses are going to be and form that plan of attack on how to address, control, and minimize those expenses where possible. That's what we will be talking about on today's program, ladies and gentlemen. This is not a budgeting conversation. That may be part of it, but we'll talk about specific financial strategies with Chris McIntire to help you address and control retirement's biggest expenses. And if you would like to put that game plan for retirement together, you are always welcome to give McIntire Retirement Services a call. 800-868-1194, 800-868-1194. Chris helps his clients form their written game plan for retirement each and every day. And for radio show and podcast listeners and viewers, no cost, no obligation to get your game plan for retirement put together. Again, give McIntire Retirement Services a call, 800-868-1194. That's 800-868-1194. So Chris, as we are looking at retirement, we have to plan and prepare for the expenses that we will encounter, not just subsistence level budgetary items, but lifestyle as well. And sometimes that is one of our largest line items in the budget. We've got to figure out how to have that retirement lifestyle without the fear of spending ourselves dry.
Yeah, no question about it. And, after a terrible year for stock and bond markets in 2022. A lot of people who are listening today, their portfolio suffered a little bit of loss there, obviously, and they may have to pull more money out from a percentage standpoint than what they had anticipated because they have less money to work with. And I'm going to kind of transition in here to a couple of meetings I had recently with clients that are, very close within 12 months of retiring. And a couple of them were new folks that we'd never met before. One of them was a current client. So, a couple different aspects here for the listeners to listen to. And, not to get into the monthly budget items, but, when I talked to them about setting up how much income do we need to work on, neither one of them had any idea how much money they needed to work. They didn't know what their budgetary numbers were. So, knowing what you need to bring in on a monthly basis certainly helps because we have to formulate that income plan, that written income plan or software-based income plan off of knowing how much, what are we solving for? So for any of my algebra teachers that are out there,
solving for X. Unknown. Yeah. And Chris, walking away from the paycheck earning years, it would seem that that's a pretty important number to know and conversation to have to be aware of and help us to control and plan for the future with confidence.
Yeah, absolutely. And, again, trying to solve for the unknown there and what is that gap that we have from income that's coming in from pension and Social Security to what are the monthly budgetary items. We're not so concerned about going on a cruise once a year. We want to make sure, first of all, that we can solve the basic living needs. And how do we structure an income portfolio? Notice the word income there, not a growth portfolio. We're talking about an income portfolio where we can create interest from bonds or CDs, dividends from stocks, and many different items that we can use in our investment platform.
Chris, I know most of the clients there at McIntire Retirement Services have been lucky or hardworking or blessed enough, whatever you want to call it, to earn a pretty comfortable income during their working careers. And the thing is, for folks who meet that kind of description, maybe we don't need to pinch every penny or stretch every dollar while we're earning the paycheck. But for those same kind of individuals, the swing in income, the shift from working career to retirement, that change is that much more dramatic and impactful. And we generally are used to the lifestyle that comfortable income afforded us, correct?
Yeah, and I'm smiling here because I just had a couple of conversations with two female clients that are retiring, and they're both married, and and moms are always a little bit nervous, and trying to ease their concerns on, look, you've saved a lot of money, we can create a nice income out of here, and is it the income that they had when they were a 2-income family in retirement? No, but they don't need that kind of money. They were saving and investing, maxing out 401k contributions. They're no longer going to be needing to do that. So they don't need to earn nearly as much money either, right? Because if you're putting $26,000 a year into a 401k out of your paycheck, you never see that money. So, if you got paid $100,000, now you're living off of $74,000, and obviously you can throttle that back a little bit as well. So it's but understanding probably as, kind of we transition here is, what are the tax implications of, how I get this income out? We'll just use a round number of $100,000. What if you need $100,000 in the first 5 or 10 years of retirement to do that additional travel and whatnot that you want to do? And, let's be honest, it costs more to do anything these days. That inflation has also impacted us, and I guess we'll kind of blend inflation and taxation in here together as we go through the show. But if you're in a 20% tax rate and you need to generate $100,000 of income, that's $120,000 that you have to solve for.
Yeah, and we sometimes forget about that factor when looking at our IRAs and 401ks, retirement accounts, including Social Security, Chris. Those streams of income are going to be taxable if $100,000 is our target, or really even any target significantly below that. Those tax deferred accounts always going to be taxable. Social Security has the potential to be taxable based on other income. For most people, it is going to be, and retirement time is not the time to have that surprise us. We need to understand that, figure it out, and work our way through it. You've got this report here, Chris, detailing the 3 biggest expenses in retirement and how to plan to control them. There are strategies, specific ways that you can address each one of these, but the number one on your list is taxation, and it is probably our largest known expense in retirement. You talk about taxes and plan and prepare to deal with the tax liability in retirement with each and every one of your clients there at McIntire Retirement Service. How do you go about this conversation?
Yeah, and again, is understanding, what their taxes were in the past. So if they've been retired for 2 or 3 years and they come on board with us as clients, that tax return is very important because it's kind of been telling the story, and it makes it's a little easier transition into how we generate the income, and, do we do Roth conversions? Do they have any wiggle room in their tax planning for Roth conversions, or are they pulling too much money out? Not too much money, but are they pulling out so much money for their living expenses that there isn't any additional tax planning that we can do right now? I've got a couple of clients that are retired before Social Security, okay? Or they're going to wait and take Social Security a little bit later. So we're pulling a little bit heavier out of an IRA right now. And then once they start their Social Security, then we can throttle back the IRA withdrawals. And then that may open the opportunity for some tax planning or Roth conversions, if you will. And, I always like to add in here, Roth conversions are one strategy. The cash value aspect of a well-done life insurance policy is also a worthy consideration, because you might get some long-term care benefits as well out of that.
Well, Chris, you've got a billboard for McIntire Retirement Services, and many people may have seen it already, but it basically states that there are 32 trillion reasons, kind of hinting at the national debt. These are 32 trillion reasons why we need to plan proactively for taxes, to control our tax hit, because it's not what we have, it's what we get to keep, it's what we get to spend out of it. And that national debt deficit, the spending that Washington likes to do, all of those are pretty compelling reasons why, as we look forward to retirement, we need to plan to manage the tax hit, the tax cost that we will face and incur.
Yeah, no question about it. Government, the way we can control the national, or the national deficit or national debt, if you will, is, they're either going to cut spending or raise taxes, and obviously we've had the debt ceiling talks and whatnot here, and, talking about them spending less money. They just have a spending addiction, regardless of the political party. Let's remove that from our conversation. Government just likes to spend money. And if they're handing something out to somebody as an entitlement, it is very hard to take that away. So, we end up with this big, massive deficit. And, how are they going to pay for it? And they always say, well, we're going to target the rich or whatever and make the rich pay for it. And, that's not always the case. There are lots of different ways that they can tax people through licensing fees, a registration. Those of you that buy electric cars and whatnot pay more for your license plate. So, there is some give and take there.
Any profession, any trade, Chris, right? Plumbers, contractors, electricians, beauticians, massage therapists, financial advisors. Yeah, they're all having to pay fees and licensing on one side, and then when they earn money on the other side, getting taxed. And then when we save for retirement, one way or another, whether it's tax up front or tax when we retire, tax is there to access our money. And then when we go to spend it, sales tax. Just so many different levels, Chris. But the one that we are looking at primarily here is that a generation of Americans have primarily saved for retirement in these yet to be tax deferred accounts. And now just may be the opportune moment to control and manage the total tax bill that we have on those dollars. And I know you've talked about that repeatedly on the program, and then each and every day with your clients there at McIntire Retirement Services.
Yeah. So, and if you just want to think about this is, if you were a politician, and you knew how much money was in IRA accounts, where the bulk of the money is, how old the folks are that have these, okay, where they are in their phase, that money's going to be passed to their children and grandchildren when they die. They've already made a change and shortened the time frame up that they have to withdraw that money. So that's something that they've already done. Okay. And then the rate of income tax is something that they can change very quickly as well. So, that's the thing to be aware of or cautious of is, how much money is in, taxable accounts. What is the most efficient manner to distribute it or to convert it into more tax-friendly vehicles, to speak generally?
Again, we are talking with Chris McIntire, president and founder of McIntire Retirement Services, Northwestern Ohio's resource for proactive planning, for a common sense approach to planning for your financial future. Home of the game plan for retirement, your game plan for retirement, ladies and gentlemen, the proprietary written plan that you can get put together there at McIntire Retirement Services. And if you would like to review or double check your investments, your retirement accounts, your plan, if you'd like to get that plan in writing and put together, pick up the phone, give Chris McIntire a call, 800-868-1194, 800-868-1194. Or if you would like this report detailing the 3 biggest expenses in retirement and how to plan to control them, you can call and request that as well. Go over it on your own time. Again, 800-868-1194. Also a library of valuable content and information at McIntireRetirementServices.com. McIntireRetirementServices.com. They have offices conveniently located across Northwestern Ohio and can meet with you personally, individually, confidentially, or through the ease and convenience of virtual meetings. That's also available. You can start with a phone call, though. 800-868-1194, 800-868-1194. Moving on in this report we are detailing today, Chris, of these 3 biggest expenses, the number 2 on the list is our largest potential expense. Now, not everybody will run into extensive healthcare costs, but even routine costs are a large amount of money when you add it all up. And really, the statistics, the numbers show that actually more often than not, some type of assistance is needed where we will encounter those higher than baseline medical and healthcare related costs and expenses. We've got to have a plan for that, right, Chris?
Oh, sure, buddy. I got a 90-year-old dad and an 86-year-old mother that, essentially live at going to doctor's offices, because, obviously their health is starting to decline here. And, so it takes gas to drive to all those doctors. They live in a rural area, driving to Toledo and Ann Arbor and whatnot for their medical expenses. So, if you're 65 and you go on Medicare, they take $165 a month basically out of your Social Security for most individuals. Okay. And let's say you're paying $165 for your Medicare supplement insurance and $100 for your Part D prescription drug benefit. Then all your out-of-pocket expenses that you may have and deductibles. Okay. Plus, if you needed to pay somebody to come in to help take care of you at home. We have a Robin's father. We pay somebody, 3-4 days a week to come in and spend 4 or 5 hours a day with him, just to make sure he's got meals ready, put eyes on him and so on and so forth. He wants to be independent. He's pretty good at it. But man, we're talking, upwards of $1,000 to $1,500 a month. That's $12,000 to $18,000 a year just to be at home.
Yeah, and Chris, the Health Services Survey from 2017 detailed that the average 60-year-old couple will incur more than $350,000 in baseline health-related expenses. This is just for Medicare premiums and deductibles and copays over their lifetime. That number is a scary large number, but doesn't even include more extensive healthcare events or the potential for long-term care where that number gets significantly higher. So the only way for us to plan and prepare that these expenses cannot catastrophically exceed our assets and our ability to cover them is to plan proactively, is to evaluate all of the options in place to discuss this real potential. Department of Health and Human Services puts the number at 69.8% of people will encounter some level of need for assistance in care before the end of their life. That also is a pretty scarily high number. But we've got to plan for it. We've got to detail and document what our plan is, Chris. And there are strategies that can help protect our assets, but maybe more importantly, our family and loved ones, correct?
Yeah, buddy. And, I'm pretty passionate about this piece here because, as you've known, for about 4 years, we've been in charge of caring for a dear friend who is now in a nursing home, that's about $8,500 a month, and they had planned for that ahead of time. So they have a long-term care type policy that pays 100% of that bill. So $8,000 a month times 12 months is $96,000 a year. They offset that risk with an insurance company. I've got 3 older parents, that I could take 24 hours a day and make their life easier, but I don't have 24 hours a day, So even family members, we bear some of the cost of all of that ourselves to make our lives easier to buy somebody else's time, if you will. And so many people out there listening today say, well, my daughter or son will take care of us. They were a retired nurse or whatnot. But they can't do it 24/7. Now, I mean, that, people have their own lives. They may live in different locations. And, there are so many other avenues out there to get help with how do you pay them. So if you got a daughter that's going to put their life on hold and take care of you for a year, how are you going to compensate her for that? And do you anticipate or expect that they would do that for free? Yes, obviously, if they have the means to do that, that's wonderful. But in most cases, that's not what's going to happen. You're going to have to pay out of your pocket, and that is an incredible potential expense.
Taking them, Chris, out of their peak earning years as well, right? This is not just your assets. This is the assets of the child, of the caretaker in the family, because they are taking time away from their productive peak earning years also. I mean, this really has the potential to change the trajectory of 2 generations of family financial comfort, confidence, and wealth.
Yeah, and with the baby boomers getting older, by the time we get to the year of 2030, the amount of our population over the age of 65 and even older than that, is growing at an alarming rate. So think about the resources that are going to be squeezed. Employees, is there going to be room in nursing homes and extended care facilities, assisted living, even adult respite care, where you can take somebody for the day so that you can get a chance to, catch up on yourself. Because it is hard to be a caregiver for a family member. That is a very stressful role to play because it never turns off.
Well, again, we are talking with Chris McIntire, your resource, ladies and gentlemen, president, founder of McIntire Retirement Services, about the 3 biggest expenses in retirement, how to plan to control them. We have so far covered your largest known expense, taxes. There are specific strategies to address and control the tax liability. You need to map that out and plan carefully to keep more of your money. Chris can show you those strategies and detail them for you, compare and quantify the cost and show you side by side. Number 2, your largest potential expense, healthcare expenses. And Chris, again, there are attractive options for addressing this. And while the industry, I know, has changed, perhaps it has changed for the better and improved in many aspects. When you look at the spectrum of potential possibilities, having no plan whatsoever, having a plan to become dependent on family or the government, being self-insured, there's some middle ground there where we can really leverage dollars, provide some significant protection, and not have it be out of pocket, use it or lose it money that's just thrown away, right?
Absolutely. And if you have had experience with, family members and loved ones that have paid significant dollars out of their own pocket for their care, those are the people that are most likely to see the need and have solved that problem for themselves. For those that have never dealt with it just yet, and you think it won't happen to you, I'll say this, if your house caught on fire, whose money are you going to use to rebuild it outside of deductibles and insurance companies? Okay? And that's a 1 in 1,200 chance of happening, your house catching on fire. Okay. So you have a 1 in 2 chance of spending some time in an assisted living or a nursing home type facility. Okay. Whose money are you going to use to pay for that? And most people that are listening to the show today are saying, well, we're going to pay for it ourselves. Okay. But for something that's got a 1 in 1,200 chance of happening, you're paying money for something that has a very limited chance of happening. Okay. But you do it just in case, because that's your, protecting your nest egg and where you live. Okay. You're doing the same thing when it comes to long-term care. You could actually have to sell the house and pay that money to the nursing home, for single or widowed filers. Kind of 2 different circumstances. It's probably fair to bring this up. Married couples can certainly conserve more resources if somebody went into a nursing home and you wanted to go on the government roll, Medicaid, versus somebody who's single or widowed, for example. Another set of circumstances for the financial, running through the financials on how you would qualify to get care there.
But you need to have a plan, ladies and gentlemen. You need to document that plan and understand what the ramifications, implications are going to be. And kind of like any insurance, Chris, that I can think of, I hope never to have to use it, except I do want it in place if that event occurs. And there's no other style of insurance that I can think of if that event does not occur, that they refund me what I've paid to the insurance, or pay the benefit that was going to provide, and that is available here. So worth exploring, ladies and gentlemen, and having these conversations with your qualified, experienced advisor. And of course, you've got the resource, Northwest Ohio, across the great state, Chris McIntire and McIntire Retirement Services. So pick up the phone and give him a call, 800-868-1194. That's 800-868-1194. And now, Chris, we've spent some time on the first two. Let's get to the last one of the three biggest expenses in retirement. It is the silent thief, inflation. And a lot of times it's silent, hasn't been so silent the last few years, and probably over the course of a 20, 30-year retirement, there will be times where we will see inflation.
Yeah, absolutely. And we have seen it, more in 2022 than in 2023. I think inflation is starting to, come down pretty significantly. And, inflation is a lagging indicator, or, as they raise interest rates, it lags behind, the impact that they have on inflation. So as we go through the course of 2023 and even into 2024, we may find that inflation will get put back into the bottle, or is back in the bottle already. We just haven't seen all the ramifications of it. Because if you was watching the TV even this morning as we were preparing for the radio show here, is they had a professor down at Duke University on the CNBC Business Channel, and he was saying, if you start pulling out some of the pieces of, how they calculate inflation, the real rate of inflation now is about 3.3%. The government might say it's at 4.9, but housing prices are coming down in large parts of the country. Food prices are still kind of hanging in there right now, but fuel prices, lumber prices, automobile prices, things are coming down, and hopefully the worst is behind us. Okay. But, that being said, we all need to be cognizant of, at a 4% inflation rate, hey, in about 12, 13 years, we need to about double our income just to match what we're doing today. So, that's the threat of inflation, even at 3 and 4%, where they want it down to 2 or below, it can certainly be a detriment, and it hurts a lot of people, obviously on the lower side of the economic ladder. But a lot of widows in retirement and, kind of single earners, those are the ones that typically need to have some sort of, cost of living adjustment or a way to help increase their income as they go through retirement. There are many annuities that offer a way to give you an increasing income throughout retirement as well. And that can help you maintain your current cost of living as the standard of living goes, right?
Well, Chris, I know that we need to account for that. Retirement is in the future, and then once we get there, it is in most cases several decades, so even more future years. And I know a lot of retirement plans, you've sort of harped on this, do not account for inflation, and a lot of times people have the perception that spending will slow into the middle to later years of retirement, and that may be true. We may not be doing as many activities, but the bottom line, baseline expenses that we do still need to cover are probably going to have increased in price. Just like if we look back 15 to 20 years, we were paying less for things back then. We need to kind of superimpose that and plan for it into the future as well, correct?
Yeah, I take Robin's dad, for example. He's 94 right now. Okay. He retired at 48 years old after getting his 30 years in. Okay.
Wow.
He's still getting the same pension payment in 2023 that he got, 40 years ago. Okay? Wow. And think what inflation has done with that. Even if it was just 3%, it is basically, eaten that up. And thankfully he can live pretty pretty cheaply with some, he gets some assistance from us as well, and, Social Security, and lives a pretty modest life. But now he's got to pay somebody to come in and help take care of him, to keep him at home, to maintain where he can stay at home. So for those of you that are out there listening today, you may say, like Peter said, hey, you'll probably spend less money on travel as you get older, but you're going to spend more money on healthcare, especially if you want to remain in your house, and you're going to pay somebody $25 an hour, 4 hours a day. That's $100 a day, 4 days a week, $400 a week. That's $1,600 a month, and $18,000 to $20,000 a year just for some part-time stuff. Where are you going to get that from?
Yep. It's clear, ladies and gentlemen, need to plan for our largest expenses in retirement and identify the ways that we can control them. And that's what this report that we have detailed today is all about. We've talked about what these are, identified them. To learn more about the strategies that will help you plan to control them, that's why Chris McIntire is there as your resource. You are welcome to reach out, be in touch for the report, the 3 largest expenses in retirement, how to plan to control them. But the game plan for retirement, your game plan for retirement, is the proprietary written plan that Chris McIntire, the team at McIntire Retirement Services, will help you put together to detail these, as well as optimize many aspects of retirement, your Social Security, the risks that you're taking, the fees that you're paying, the taxes that you may be liable for. All of those will be addressed, trying to minimize risks, fees, costs, expenses, maximize your confidence in retirement. Pick up the phone and give a call, 800-868-1194. That's 800-868-1194, 800-868-1194. Chris, we always appreciate your time, the information you share with Northwestern Ohio savers and investors and proactive planners here on Your Game Plan for Retirement.
Hey, my pleasure, Peter. Thanks for listening, everybody. Have a great weekend out there.
Tune into Chris McIntire's full radio program and visit McIntireRetirementServices.com for many additional valuable resources, including other great episodes of Game Plan for Retirement with Chris McIntire. Be sure to subscribe.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookstone Capital Management, a registered investment advisor.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.